How does a $20 billion bailout of Argentina help Americans?
Do you know what a swap line is?
It's currency swap, yes.
Yes, but what is that?
You're the Treasury Secretary.
Yes, but why would you call it a bailout?
That is how...
In most bailouts, you don't make money. The U.S. government made money.
Welcome back to the Ultimate Trader Workshop. In this video, we're going to be discussing a set of misinformation that has been propagated surrounding the United States and Argentina. And that propagation being that the United States gave or gifted Argentina $40 billion to bail them out. Okay, so I'm just going to quickly talk about how that's not the case. This is just to give at least my viewers the correct information as it pertains to that transaction. Okay, it was not a bailout. We did not give them anything, and that's why we're dealing with a chart. In essence, in a true sense, what happened is a giant $40 billion Forex trade. This is all about Forex. This is all about currency. It's not about giving cash or anything like that, but this is about a currency swap. Okay, so in essence, this was a gigantic two-position Forex trade that consists of, like I said, two positions, both being $20 billion. But when you talk about compounding and stacking, the second $20 billion doesn't come unless there's enough profits shown on the first position of 20 billion. We did not give it to them. We kind of fronted it. They have access to $20 billion in currency. There are some other things that had to happen first before that can even take place. And I'll get to that in just a second, and then we'll talk about the charts. It's probably going to be a short video, but power packed with a lot of information. So basically, when you're looking at a chart like this, this is the Argentine peso, or ARS USD, like we would do euro dollar, EUR USD, or pound dollar, or NZD USD, anything like that. Okay, it's a Forex pair. The United States is making a Forex trade, okay, swapping pesos for US dollars. In essence, the United States is long peso. Okay, that's all this is. So if I were to go over to the chart real quick, you'll see when this took place. Okay, it was October 9th. That's when the position was opened. Okay, we're going to do some technical stuff right here. You also see now that that's happening, they were already in position to start recovering. There's a lot that's been going on with Argentina. There's been a lot of things taking place to kind of keep them from completely collapsing, okay, and becoming 100% insolvent. But that agreement was made, this swap, which includes us taking back their currency too, and attached to bonds and fees that they have to pay with the money that they do have. They're not completely broke, but they have to pay. In these securities, they have to pay for that. It's not free. We did not give them anything. But for the first position, they do have access to $20 billion US. At the same time, we begin making money on the trade transaction. So again, looking at the charts, one of the things that I teach on one of my lessons is 3 white soldiers. So I wanted to give us something to smile about. This is a great sign, okay? And you also saw at the beginning of the video, the currency chief, Scott Besson, explaining this exact thing that I'm talking about here to a news reporter. But this 3 white soldiers right here, opening candle here, close, open, close, 3 straight. I'm only looking at the weekly chart, but 3 straight weeks. I know that's not a lot, but what's more important, if I just dive in a little bit, is you see some stabilization, okay? No longer is that free fall, okay? So with the other things that I'm going to talk about right now, that's why the U.S. was able to step in and say, you know what? Okay, I think there's some things that we can do, and these things really matter. So let me start over here, okay? The U.S. does not step into a currency collapse alone, meaning there are many other parties. It's not just a United States and all their might, and here's $40 billion, and it was our taxpayers' dollars, and we'll deal with it later. This is not the case. So if a country's currency is in a free fall, like the ARS, Argentina's peso, the U.S. cannot and will not put billions of dollars at risk unless there is an IMF stabilization program, okay? IMF oversight, IMF conditions on it, IMF quarterly monitoring. So there are other bodies at play in this. This is because the IMF acts as the former supervisor, okay? The economic referee, financial risk assessor to make sure that, yes, this country is going to be okay. It's tight right now. They're going to be okay. The enforcer of reforms, because so many things are being reformed. This is bigger than just, oh, we're down and out, give them $40 billion, okay? The U.S. will not risk taxpayer money unless those structures are in place. Okay, let's go to the top. The IMF is a global financial rescue organization, okay, that steps in when countries collapse, okay, providing emergency loans and stabilization programs, but with strict conditions. And the U.S. is its biggest and most powerful decision maker. Okay, let's look at the last little part, and we're gonna tie this thing all together. Why does the IMF care about countries like Argentina? This is very important, people. Like, some of this stuff is not a laughing matter. Some of the stuff is you can't joke about. You know, some of the stuff we gotta be mature about, because a major collapse affects everything, global markets. Like, for them to go completely insolvent, that is really, I mean, being tight and being down and out where your currency rate is 7 cents on the dollar is bad enough. You're pretty much dead. Okay. Investors around the world lose money if a currency collapses. Okay. Contagion can spread to other nations. U.S. allies want stability in the region. A failed Argentina could turn to China or Russia for help. Okay? So the IMF has an interest in keeping countries alive and functional. So this is bigger than the United States just gifting Argentina $40 billion. Of course, like I said, it's two $20 billion swap positions, as you saw in the beginning of the video. Last but not least, we can see, if we look at RSI, Relative Strength Index, speed of transactions starting to move up as you see the slowing of the free fall and the curve starting. And then right here, luckily enough, we do get our first sign of light. There has not been a 3 white soldiers going back to 2012 when Argentina was actually pretty powerful. So bullish divergence, not overbought, got some room to move. Whole lot of things going on to help stabilize Argentina, and that's what this is all about. So I hope that you learned something from this. If you were one of the people around there spewing propaganda, why did we just have $40 billion to bail out those people while we need money over here? This was an investment, and the United States stands to make a ton of money in this currency swap. Plus, it is secured. It's backed by bonds and fees. And the backing of the IMF says that, you know what, it's probable that we can pull them out of this whole complete currency collapse. So I hope that this one brought some value to you. Hit the like button if you liked it. I know this one isn't the typical video that we do, but you know, we're kind of widespread here. It's not only the education and the trading. Sometimes we gotta hit some of these social and political sectors. I wish I didn't have to, but hey, that's just me. I hope that you love it. Subscribe to the channel if you want more information on the things that we didn't show here as it pertains to trading, advanced pattern recognition, harmonics, and everything pertaining to structure analysis. Everything I talked about here and much more here at the Harmonic Trading Club. Just head on over to the Harmonic Trading Academy playlist. So quite a different one here, but share this video because you could help someone that's out there spewing misinformation. Okay, that being said, you guys be good, take care of yourself in the market, and I'll see you on the next video.